Hello, everyone. Thank you very much, Fred, for that feedback. As I never knew that we were not, I was not live in terms of my audio device. But thank you very much. We got things sorted out, and I think that things are quite okay at your own end. So I would really appreciate your feedback, please. If you can hear me loud and clear, please let me know right in the comment section. Thank you very much once again, Fred. So like I was saying earlier, it's Friday, and happy Friday to everyone in the house. Good morning to you, good afternoon, good evening, depending on whichever part of the world you are tuning in from. And I'm very excited to welcome you to the last edition of the Forex Morning Mastery, as we are going to be taking a fresh new perspective into the financial market. And of course, we all know how Fridays are and how we usually anticipate such days like this. As considering the fact that today is the last trading day of the week, we usually anticipate that majority in the market will be gradually rounding off their positions ahead of the weekend, and this usually reflects on the chart as price action moving in the opposite direction of the prior leading price action. So you know how we do it. We are going to be taking this into consideration while we review our current market conditions based on what we have on the chart today. Well, as usual, we have been monitoring three major assets since the beginning of the week, which includes the US All Spot, the GBP USD, and of course the XAU USD, which is popularly known as the gold spot. And in fact, we've done pretty fair across assets. We did very well on the US All Spot. We did a little bit good on the XAU USD, and the GBP USD too was also very phenomenal. So we are going to be taking another fresh new look at the market today. And in fact, we are not just going to be predicting the market, but to master it. And together we are going to be deciphering the language of candles, understand the psychology behind price movement, and of course identify golden moments when the trading stars align together for us to get new opportunities. So thank you very much, guys, and I welcome you all once again. And for those of us who are joining for the first time, you highly welcome on board. I'm very excited to have you around with us this morning. As you might be asking what this is all about. Well, the Forex Morning Mastery with Sheriff Daramola is a platform where we gather here on a daily basis as technical traders, looking out for trading opportunities while we also manage our existing positions, if we have any, while we project ourselves ahead of both the London and the New York session. And I do encourage you to stay tuned in so you don't miss out on any of the valuable ideas we shall be deliberating on today, and of course be part of the subsequent editions, as the more time you spend with us, the better you become in using the strategy and eventually be able to make your own independent trading decision using the information you gather from this community. So once again, I welcome you on board. And for the sake of clarity, let me state here one more time that the Forex Money Mastery is basically going to be on the 1 hour time frame alone, and is a follow-up detail to my analysis during the course of the weekend, where I usually project my plans ahead of the new week. So if you had not watched my video prior to the Forex Money Mastery, then I would encourage you to watch these videos, as it will give you a background knowledge of how we got to this point, how we were able to identify the important levels we will be using as a yardstick to guide our trading decision for the week. And of course, it will also serve as an educational tool in guiding your independent trading decisions. So once again, you are welcome. I'm yet to get feedbacks in the comment section. Please let me know if the sound is good, that you can hear me loud and clear over there, so that I can confirm that we are all on the same page. So with that being said, here we will be diving right into the business, And as usual, you know how we do it. The first thing we normally do, our daily routine, is to check on the economic calendar. We, of course, know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves ahead of the economic events as usual. So with that being said, right here on the economic calendar, we are going to be focusing on two economic dockets for this week, since the asset we have on our watch list includes the pound sterling and the United States economic docket. So we are going to be streamlining this. So we are going to be taking out all other economies, as this does not affect the assets on our watch list. Then in terms of the impact of the event, let's use the high and the medium, at least for the sake of today being the last trading day of the week. And what do we have here? Now for today, Friday, October 27, which happens to be the last trading day for the week, we have inflationary index which are coming up, which is the major one everyone is looking forward to today. That is the core personal consumption expenditure, which is coming up in about 4 hours from now, I think, from the United States economic docket. And for those of us who don't know, this is an index released by the US Bureau of Economic Analysis. And in fact, this index gives us an average amount of money that consumers spend in a month. And well, this based on this, it's also considered as a significant indicator of inflation in any particular economy. And because of the fact that it's a significant indicator of such, the Feds are likely going to be, they will not likely, they will be looking forward to see what the data will be, as whatever comes in here will be determining the next interest rate decision coming in from the Fed. And of course, a high reading is considered as positive for the US economy, which in the long term dovetails to a positive momentum for the US dollar. Now, if we look at the previous data for this asset, you will see that the figures we have here, 0.1% and 3.9% respectively for the month on month and the year on year, is higher than what economists are projecting for this month. And as a result of that, it is very likely that we might be seeing some contraction in the US economy. So we are going to be looking forward to what the actual data is going to be on that one. Then we also have another important one here, which is the publication from the University of Michigan, which is the Consumer Sentiment Index for the month of October. This will be coming up in about 5 hours from now, and it is a survey of personal consumer confidence in the economy as well. And generally speaking, a high reading is considered as positive, while a low reading is considered as negative. Now, the previous data and the consensus projection remains the same at 63. So there is an indication here that there really has not been any significant growth or decline so far in the last 1 month. So we look forward to see what the actual data is going to be like. And of course, you know that as technical traders, we are going to be delving back into the chart. And what we want to be doing here is to sniff through the current market structure, as we know that the anticipation of this event alone has a tendency of influencing the market sentiment, which of course will dovetail to price action. Now, talking about price action, the first asset on our watch list for today is okay, I see your comment, Jonah Aruna. Good morning to you. Thank you very much for that feedback. I really do appreciate that. So The first asset on our watch list for today is the US All Spot. Now, on the US All Spot, we have quite an interesting setup gradually unfolding on the chart right now, as you will see how sellers have been struggling around that $83.82.50 zone since in the last 24 48 hours in this market. And this could be as, and the recent rebound, of course, in the US oil follows recent US military strikes in the Iranian targets in Syria, which have heightened concerns around potential escalations in conflict like within like the Israel-Hamas situation. And everyone is very, very on alert at this point in time, as we do not know how far this tension is going to get, and if it does, we might likely be witnessing some hindrance in oil supply across the globe. And if this is likely, price of oil may skyrocket to the upside. Now let's look at things from a technical standpoint, and in fact we do want to see how the week started for us in this community and how we've been trading the US oil spot so far. So reversing back or rewinding back to the beginning of the week, you remember that we saw how price started the week on an indecisive note, as we saw price consolidate between our key level for the week at the $87.50 level and the $86.60 area, to emphasize the uncertainty that was going on in the market at the beginning of the week. And of course, you know, whenever we identify flat channels like this on the chart, the next thing we want to do is exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in fact, we had a buy position triggered initially, remember, which didn't do well for us at the beginning of the week, as we had our first buy position triggered as soon as price broke out that key level. Price moved about 35 pips in our favor before sellers came in to take us out of that position in a loss. And for the fact that we were positioning ourselves below the support line of that range, we capitalized on the bearish momentum, and since that moment we have been selling the US oil spot. We had a couple of more sell positions, as you see here. We also had one when we identified this range a couple of days ago, I think. Okay, I think that was on, okay, yesterday morning we identified another level after identifying this range. Let me zoom things in a little bit so that we can see things clearly and be on the same page together. So yesterday during our live session, this was what we saw here. Remember, we had a range identified just within that demand zone. We saw this consolidation phase between the $85.30 level and the $84.85 area, giving us an insight into the indecision going on at that point in time. And with the breakdown of the support line, we had another sell position triggered, remember. And for those of us who missed that one, we had a retest of structure. And during our live session yesterday, price was actually below the $84.38 level, and I said that if price will come back into the structure, we do want to be joining a bearish move. And I do hope that you took advantage of that opportunity, as if you had done that, we saw price moved about how many pips? Let's look at this together. Price moved about, from here, price moved over 200 pips on the first one, and the second one here, price moved from the $84.38 area about 190 pips, and the third position had the breakdown of the $83.82. We had about over 100 pips in profit on that one. And in fact, if you had moved your stop losses, which we usually do when price moves significantly well, you must have been taken out with a considerable amount of profit. And once again, well done and kudos to you for being on standby to capitalize on this move. Now, going into the New York and London session today, what is going to be our plans? What are our intentions? Now, we are going to be using this technical analysis to buttress the fundamental aspect of this market, as we all know what is really going on in the Middle East, which has a tendency of affecting oil prices. Now, one thing that I was able to identify this morning, for those of us who are with me on both my Trading View and Telegram platform, you must definitely have gotten this update as regards to how we are going to be managing our positions. So following the breakdown of this demand zone, remember we had a demand zone here at the beginning of the week before this level was broken to the downside on Tuesday. Now price dropped into the $83.80 zone, $83, sorry, and the $82.50 zone, as you will see that in the last 48 hours sellers have been finding it difficult to break through this level. And what this simply tells us is how strong the buyers are at this point in time, which dovetails to the fact that majority of the market sees the US oil price cheap enough to buy based on the economic situation going on across the globe. And in that regard, I've been able to identify that area at least as a temporary demand zone for the meantime until we have a breakdown of that structure. So based on what is going on here and the fact that sellers are finding it difficult to break through the $83 and the $82.50 zone, we would want to maintain a bullish bias here. And the only condition that will make us to want to sell the US oil spot is for price action to slice through that zone, taking out all the buy positions there, and if possible, a retest of structure confirming that sellers are gradually gaining momentum for us to push price to the downside. If this does not happen today, I wouldn't consider selling the US oil spot. Now that we have taken that out of the picture, let's look at how we want to be capitalizing on the uptrend scenario. Now, with the fact that price action has found a temporary support zone within this area, we definitely want to be looking out for market conditions that will support the idea of buying. Now, if you look at this structure here, especially during the last 24 hours, you will see that this impulsive move all the way into that demand zone, we saw a sharp rejection. Price came back into the $83.82 level, gradually transitioned into what looks like a reversal pattern in the form of a double bottom structure. And whenever we notice a double bottom structure on our chart, it's a clear sign that buyers are gradually gaining momentum. And not only that, can you see here, you will see that the lowest point that we had in the last 24 hours was around the $82.20 level, and during the early hours of today, you will see how it had become difficult for sellers to even go close to the lower low. And what this simply means is that there is a potential that buyers are pushing price to the upside. Now, immediately we identify this, the next thing we want to be doing is to mark out the neckline of that reversal pattern, which of course we need it to be broken to validate the potency of this reversal pattern. And interesting enough, the neckline lines exactly with our resistant line of that range we identified yesterday at the $83.82 level. So we need to see price break out of this neckline to confirm that truly we are going bullish on this one. And look at what happened during the early hours of today. We saw price just broke out the neckline. In fact, we had the breakout happen here during the early hours of today, and since then price action has been trading above that structure. And in fact, if you are taking advantage of that buy position at that point, considering the fact that price still remains above a demand zone, well done to you for being on standby to capitalize on that one. However, if you had missed out on that opportunity, let's wait and see how the market is going to play out. You know, from a technical standpoint, whenever price breaks out of a key structure such as this, we expect at some point in time we may likely see a retest of structure to incite an uptrend continuation. So if price will come back into that area, we do want to be looking out for more opportunities to buy. Now, in fact, if you look at this neckline here, let me show you something around this area, around the $84 area, just exactly around that area. you will see that it still lines up with that structure. So anywhere above that $84 area still looks very promising for buying opportunities here. And if price does not come further down and continues to climb up, then a breakout of the $85.20 level will be welcoming more buy positions in this market. So let's see how the market will play out going into the London and New York session today. And trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you update as at when due. So on the US All Spot today, I'm looking at a bullish momentum as long as price action still remains above that demand zone we identified here between the 83 and the $82.50 zone. And like I said earlier, the only condition that will make me want to consider selling the US All Spot is for price to slice through the zone before I can consider selling. But if this does not happen, let's keep our eyes fixed on a bullish potential in this market. If you have any questions whatsoever as regards the current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. You can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading decisions for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. All right, so the next asset on our watch list today is the GBP USD. And on the GBP USD, we have a little bit complicated situation we have here, as buyers have been struggling ever since price action tested that low around the 1.20750 area since yesterday. And in fact, though we had some bullish traction increase, but prices still looking very bearish at this point in time. Now, before I can go into the details here, remember that we have been selling actually since Tuesday. At the beginning of the week, we were initially buying, where we were able to scoop in over 200 pips in profit on the JP USD before the downtrend scenario started here, taking us out of the buy position and triggered some counter trade opportunities before we finally saw an opportunity to add more position to our existing trade around the 1.21450 level. Now, there is something I emphasized here yesterday, which is still a source of concern for me, and the only way we can see this is on a higher time frame. And in that regard, I want to take you into the 4 hours time frame. Now, for those of us who had watched my video on the GBP USD during the course of the weekend, you will be familiar with the setup we have on the 4 hours time frame. Now, the first thing first you would notice here is how the 1.2100 area and the 1.20500 level had played a major role in negating all attempt by the sellers to break through that area. Now this zone here, just right above the 1.2 psychological level, has always negated that, giving us a demand zone to work with ahead of this week that is about to end. Now, in addition to that demand zone, we were able to spot a trend continuation pattern, a downtrend continuation pattern in the form of a wedge. So to give a visual representation, we had this impulsive move all the way to the downside. We had higher lows giving us an ascending trend line, then a descending trend line, of course. Now, with this kind of pattern on the chart, it more or less tells us that sellers might likely be pushing price to the downside, and that the only condition that will make us want to be selling is for price to break down the support line of that range, which actually happened. Price coming back to retest the structure, which is where we are right now, as we do not know if price is going to be retesting the structure to incite a downtrend, or will price action climb back above this trend line to incite a bullish momentum. So we are at a very critical juncture in this particular market. As you will see, let me zoom right in so we can see things clearly. So you will see that we have a breakdown. Price comes back into the trend line, and in the last 16 to 20 hours we have been noticing selling pressure around that area. So for us to make the next decision today, we will need to see how the market participant will be reacting to this ascending trend line. And to help us do that, remember, if you for those of us who are with me on both my TradingView and Telegram platform, I shared an update on the 15 minutes time frame where I spotted this setup here, where price was initially confined within the 1.21060 level and the 1.21330 area to emphasize the level of indecision at this point in time. And I said here that we are going to be buying at the breakout and retest of structure to confirm an uptrend scenario, or sell at the breakdown retest of the 1.21060 level. Now, if you look at what has been going on here, this actually happened during the early hours of today, so I missed out on buying at the breakout and retest of the 1.21300 level, but I think some of us did bought above that area, and if you did, you will currently be running with a loss of about 7 pips at this point. And I do hope that you had your stop losses in place just right around this area, which will be dovetailing to about 25 average stop loss on this one. Now, with the way things are going right here, we need to also consider the fact that price is within a very strong demand zone, which of course we saw on the higher time frame, which has a potential of pushing price to the upside. But one thing that is of concern for me here is how sellers have been negating all attempt by the buyers to break out of the zone. Now look at what has been going on here since the early hours of today. Continued selling pressure at every point in time buyers comes into that area. Now this is the only concern I have about this market of joining an uptrend scenario. So in that regard, I need to be exercising patience at this point in time. Now if we scale back up into the 1 hour time frame, this is what I was able to spot here that we will be using to guide our trading decision for today's trading session. So hold on a second, let me extend this out a little bit. So we are bought here and we have a range, and in fact the range has expanded into the 1.21450 and the 1.21060 area, as you will see, giving us a consolidation phase, emphasizing the level of indecision at this point in time. Now if price action continues to remain within this range, we have no other choice than to exercise patience and wait for new opportunities to emerge. Personally, if you are yet to buy the GBP USD, I would just suggest you have position yourself above the 1.21450 to capitalize on the uptrend scenario. And if there are new setups, I will let you know in the comment section of both my TradingView and Telegram platform. However, if we are going to start considering selling here, I want to be seeing the breakdown of the 1.21060 level, and if price continues to drop to the downside, breaking down the the lowest point price action has been for this week, we want to be looking out for more selling opportunity. So basically for today's trading session on the GBP USD, our center of focus is between the 1.21450 and the 1.21060 level, where depending on where the direction of the breakout will be giving us a clue into where price is likely going. Now remember that we're looking forward to an inflation indicator event coming up today in the United States, which will also be giving us some impetus into what will be happening in this market. So let's remain very patient here. Price is still consolidating, and the fact that we are sitting within a robust demand zone still gives me the inclination that price may go to the upside. But if we see price drop below the 1.2021060 level, then we might start considering some opportunity to sell. But one thing I would like to say here is that we will need some confirmations at this juncture before we can join a sell position. So let's see how the market will play out in the next 2, 3, 4 hours. We should be able to have an headway, and I will definitely give you updates on both my TradingView and Telegram platform. If you have any questions whatsoever as regards to the current setup, or you need some clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds. Let's see if there are any questions before we move on to the next asset on our watch list for today. All right, so in the absence of no questions, I assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the XAU-USD, my favorite, popularly known as the gold spot. And in the last 24 hours, the market has really been very choppy. As you will see that price has been consolidating between the 1,990 and the $1,978.50 level, further emphasizing the level of indecision going on in this market. And in fact, since the beginning of the week, we've been profitable on this asset so far, though the week started on a negative note. Remember, we had a stop loss on our first buy position after buying the breakout of the $1,978.50 level. Then we were taken out of that buy position on Tuesday as price dropped to the downside. Then on Tuesday stroke Wednesday, we were able to spot this platform, which appears to be a buying niche in this market, as we saw around the 1,950 and the 1,955. And in fact, on Tuesday, when we saw those strong bullish engulfing candles slicing through that channel, we saw here how this platform denied the sellers of pushing price to the downside. And in fact, we had a hammer candle, which technically reveals the presence of buyers in this particular market, giving us an idea that the bullish momentum in this market still remains very valid. Now, in addition to this platform, remember that since the beginning of this month, price action has been on a strong bullish momentum, and in fact it was able to transition into uniform higher lows, giving us this descending trend line you will see yesterday. So we had this ascending trend line marked out, giving us an ascending trend line, of course, to work with, which further emphasize the level, the strength of the buyers in this market. And of course, you know how we use our ascending trend line in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in a buy position. Now, since price still remains above the ascending trend line, it's still making things look very bullish in this particular market. However, during our live session yesterday, remember during our live session and XAUSD live monitoring window, we were privileged to join a sell position on this asset after price broke down this temporary ascending trend line here, after noticing that buyers were still finding it difficult to break out of the 1,990 area. And in fact, price moved about, how many pips was that? It moved about 120 pips before buy pressure resumed again to push price, taking us out of that position. And if you had moved your stop loss, depending on where you moved your stop loss to, you must have been taken out with a reasonable amount of profit, or at a worst case scenario break even on that one. And with the appearance of this sharp rejection of this ascending trend line, as you will see, it took about 3 to 4 hours. And if you look at the nature of the wick of those candles, it reveals that sellers are finding it difficult to settle into that ascending trend line, giving us a couple of hammer candles in that regard, further emphasizing that buyers are still very, very present in this market. And as a result of this, and coupled with the fact that price still remains above this ascending trend line, we do want to maintain a bullish bias in this particular market. Now, if we look at things from a fundamental aspect as well, market participants are caught within a dilemma right now of a strong US GDP data. Remember, yesterday the GDP data came in at a whopping 4.9% expansion, which was in fact beyond expectation. We had an expectation of 4.2%, and the previous quarter came in at 2.6 or 2.4. It was quite a very huge expansion in the US economy. It reveals how resilient the US economy is. Now, with the way things are right now, the market participants are caught within a dilemma of a strong and resilient US economy and the lingering situation in the Middle East, as this is really causing an indecision going on in this market. And to reflect this psychology in the market, you can see how price has been trapped within the 1,990 and the $1,978.50 level, underlining the uncertainty in this market. Now, with the way things are going right now and the fact that price is caught within a range, we have no other choice than to exercise patience and wait for a significant signal to come in the form of either the breakout of the resistance line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, with that being said here, let us talk about the potentials that the sellers have here and what are the conditions that will happen on this chart that will make us feel comfortable selling before we talk about the bullish expectations at this point. Now, the first thing I would like to state here is how this zone, which I of course emphasized yesterday, the area between the 1,997 and the 1,990 area since last week Friday, as you will see here, had played a major role in negating all attempt by the buyers to break out of the structure. As you will see during last week Friday's trading session, we saw selling pressure resume around this area. We saw the same thing happened yesterday too as well, selling pressure, and since yesterday we have been noticing selling pressure around this area. A couple of hours ago too as well, selling pressure came in around that point. Now it's quite clear that buyers are finding it difficult, and of course majority are not sure if they should place more bets on the gold at this point in time based on those parameters I made mention earlier. Now, if this selling pressure persists and leads into a scenario where we see price break down this ascending trend line, remember that this ascending trend line had played a major role in guiding this bullish momentum throughout the course of this month. And if price at any point in time today breaks down that ascending trend line, this will be the first time the ascending trend line will be broken this month, which will be a significant feat to incite the idea of a momentum shift. Now, if we consider today being the last trading day of the week, where majority who had bought this asset at a cheap price may likely want to be doing some profit-taking activities, as we are not sure how the escalation in the Middle East will happen during the weekend. And if this is going to be something they will be thinking about, then definitely they might want to be closing in some of their position, which of course will reflect on the chart as price nose diving to the downside. Now, if this is going to be the case, then a breakdown of the ascending trend line would be a beautiful signal to look out for selling opportunities. And one interesting thing about the ascending trend line is the fact that it also shares a confluence with that our 1,985 level. And for those of us who have been part of this session since the beginning of the week, and of course if you had watched my video on the XAU-USD, you will remember that the 1,985 is our key level for this week. And of course, you know how we use our key levels in this community. If price breaks down that trend line and that key level, then definitely we want to be looking out for patterns and structures that support the idea of selling. Now, if price breaks down the structure, I want to look out for confirmations like retest of structure on my lower time frame, where we can see the inability of buyers to be able to climb above the ascending trend line again, and this will reflect on the chart as continued selling pressure below the 1,985 and the ascending trend line to welcome selling ideas in this market. So this is the only condition for me to consider selling the XAU-USD today. So let's see how the market will play out around this area. Now that we talked about the potentials the sellers have, let's keep our views back into the bullish momentum that started this month. Now, like I said, price still remains above that ascending trend line since the beginning of this month. And if price still remains above, we want to look out for structures and patterns that will support the idea of buying. Now, with the way things are going right now, if you are profitable, for those of us who are profitable so far this week, we can still afford to place a buy stop order above the 1,990 area to capitalize on an uptrend continuation. And please, while we do that, let's ensure that we have a stop loss sitting below the key level at the 1,985 and the ascending trend line, so that we can give enough room for price action to break. So we should have our stop loss right below that area, enough room, which will be dovetailing to between 60 to 70 pips thereabout, depending on where your entry is, while we look out for opportunities above the 1,990. Now, if price continues to the upside, breaking out of the 1,997 level, then we will be looking out for more opportunities to buy. Remember that we're still within the seller's territory right now, as since last Friday, we have seen how sellers have continued to negate all attempt by the buyers to break out of the structure. However, if you are new with us and this is your first time taking an opportunity on this XAU-USD, then I would encourage you to exercise patience and wait for the breakout to happen. Scale down to the lower time frame, look out for retest of structure, continue pressure. All we just want to see is signs that sellers are finding it difficult to drop below the 1,990 level, and if this happens, we will see it reflect on the chart as continued buy pressure. Then we want to be joining that uptrend move, then place a buy stop order above the 1,997 area to capitalize on the uptrend continuation. So these are my views here on the XAU-USD for today, and as you will see, our center of focus is basically between the 1,990 and the 1,985 area. And of course, for those of you who are going to be part of the XAU-USD live window coming up later today, 5 to 10 minutes into the New York session, we shall be monitoring this together and see how we can capitalize on the next impulsive move that is going to happen in this market. So this is my view here on the XAU-USD for today. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to roundup on today's trading session. And for those of you who have been part of the session since the beginning, if you have found this content helpful and useful in making your independent trading decisions for today, kindly support this project by giving the video a thumbs up. Your likes are valuable to me, and it helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so. And for those of you who have liked, thank you very much. And for those of you who are yet to like, please, this is the cheapest way you can support this project. Thank you very much as you do so. So I see your comment here, Fred. Fred is saying that from yesterday's analysis was able to catch 80 pips on gold. Oh, that's great, Fred. I'm very glad and excited to hear that. And I do hope you are able to move your stop losses accordingly, secure your positions, and let's see if there are new opportunities we can take advantage of depending on the direction of the breakout today. If the breakout happens above the 1,990, then we want to start looking out for buying opportunities. And if price breaks down the 1,985, which interestingly shares a confluence with an ascending trend line that has been supporting the bullish momentum since the beginning of this month, then we do want to be looking out for selling opportunities. And I wish you best of luck on today's one too as well. Well done, Fred. So with that being said here, let's take some moment off. Let's see if there are any questions, and I will just round up for today. All right. So in the absence of no questions, we shall assume that everything is fine and all I've said so far has been quite comprehensive enough. So on this note, I would like to wish us all the best of luck. Today has been phenomenal, as in we attended to 3 of our assets. We also were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of the assets on our watch list, and of course use that information to strategically position ourselves ahead of today's London and New York session. So I encourage us all to exercise patience, allow our structures to mature before we jump into any positions. And for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And I do encourage you to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to understand how the strategy works and eventually be able to use the information you gather here to make your own independent trading decisions. So it's on this note, I wish us all the best of luck, and seeing you next week. I wish you a wonderful weekend. And remember, for those of you who have not subscribed yet, I encourage you to do so, as I will be sharing my ideas ahead of next week between now and Sunday, and that will help us prepare ahead of the Forex Morning Mastery for Monday's session. So stay tuned in, subscribe to the channel so that you don't miss out on any of the ideas and commentaries I will be sharing during the course of the weekend. Do have a wonderful weekend, everyone. ITK Investment Trust Knowledge, how are you doing today? I'm very glad to have you around with us. I guess this is your first time, because this is my first time seeing your comments. Glad to have you around, and I also wish you a wonderful weekend. Bye-bye.